There's been a large movement for more clarity when it comes to market reporting. As more methods of malpractice are dug up and exposed, more people join GameStop and AMC. One of the hot topics for the two stocks is the massive issue of naked shorting and how difficult it is to prove and act upon. Retail investors' main tactic to institutional and hedge funds naked shorting stocks has been to buy and hold, to the point that even when the stock has been heavily diluted by synthetic shares, it still goes up. As we have previously covered, naked shorting is a type of fail to deliver, which may give us a clue into June's price action when the data is released. Let's talk about the fail to deliver problem when it comes to AMC. Let's talk about the price action from this last week, and let's get to it. What's up YouTube, James from Thursday Media here, and in this video we're looking at the price action of AMC over this last week and the patterns in the failure to deliver data that's reported to the SEC. AMC finished lower this week as the stock continues to consolidate between $50 and $60. The week started and finished on low volume, but there was still enough buying and trading to keep the stock price steady in this range. The efforts by AMC CEO to convince shareholders to approve 25 million new shares may have put a damper on some buying this week. The share proposal for 25 million new shares not to be sold until 2022 has once again become a sore spot for retail investors who are still salty about AMC announcing a sell of shares during the spike to $70. And while the stock recovered and is consolidating nicely, the whole ordeal has left a bad taste when it comes to authorizing shares. But one thing that will leave you less salty than when you arrived is hitting the like button so that YouTube knows that we're still in the game. Any investor understands that a CEO's responsibility is to do what they think is best for the company and its shareholders. So AMC CEO is torn between raising more capital for the company or creating an opportunity for its shareholders to have a once-in-a-lifetime trading opportunity, and this is creating some friction. But remember that the vote on new shares isn't due for a while, and no one's forcing you to vote at the moment. If you think that we're due for a squeeze before the voting completes, then simply wait for it. As shareholders, we have to cast our votes according to what we feel is best for the stock and the company. So don't be in a huge rush to vote one way or another. This week, NSCC 002 passed, and it should begin preventing institutions from making large, unmanageable bets using short positions. Prior to 002, the policy was to check institutions once a month to see if they were over-leveraged, which allowed them plenty of time to take huge risk and avoid margin calls. Now the new policy under 002 allows them to be checked every day. Now onto the failure to deliver issue, and when it comes to AMC, it has been ongoing since 2020. Remember, during that time, hedge funds that are probably long in streaming services and similar stocks saw an opportunity to crush the competition at a time of weakness. Movie theaters were unable to open, and AMC, the largest theater chain, was drowning in debt with no cash flow to speak of. Hedge funds pounced at the opportunity to shut down AMC, and it should have been a slam dunk for them. Now, they obviously believe so, as the number of FTDs spiked in 2020, indicating a very strong case that tons of naked shorting was taking place during this time. Add on top of this the loose borrowing policies allowed to prop up the economy, and hedge funds went wild, shorting companies they saw as easy targets. The flood of short sales likely resulted in so many short orders being made at once that naked shorts had to be created to keep up. This practice probably continued unmitigated until January, when bets on GameStop completely changed the public's focus. While not every failure to deliver is a naked short, every naked short sale is a failure to deliver. And the pattern that's forming is painting a picture of how they're probably being used recently. If we look at the reported failures to deliver starting in January, we see a pattern of FTDs running high when the stock is consolidating. Another way we could think about it, there are a lot of buy orders still coming in, and that buying pressure is being offset during this time, potentially by naked shorting. As soon as the FTDs drop off, we have a large move upward, and we see this repeat again and again over the past 5 months, specifically in February, March, and May. It would also explain the long period of consolidation starting at the beginning of April and running into May. We can clearly see a near daily trend of 1 to 3 million failed to delivered shares. In May, when this pattern stopped, the stock began running, and that's where we saw the FOMO and gamma squeeze kick in, running the price up over $70. For the past month, we've returned to a period of consolidation. While we can't see the failure to deliver data for the month of June yet, once we do get this information, we can see if this was the pattern that was keeping the stock price down for the entire month. This past month has been a test of patience for new investors, but as we see short interest rising and hedge funds doubling down on their short positions, I wouldn't be surprised to see a steady stream of failure to delivers throughout the month of June. If that's not the case, then the stock is just naturally consolidating at these higher levels and waiting for a catalyst to get it moving again. We should expect some change in the price action soon, as the stock price is getting wedged tighter as this month drags on. With the end of June this week, DTCC rules going into effect, and the overall market on shaky ground, there is a lot that can happen in the near future. Of course, the longer the stock spins at these levels, the more investors will accept these prices and buy in when there's a catalyst. But as always, I am not a financial advisor. I'm just a regular guy with a regular job, just looking forward to that next report of FTDs on AMC. So always make sure that you do your own research before making any financial decisions and that you make financial decisions that you're comfortable with. If you're interested in investing, I'll leave you some links down below that'll help get you started. Some of these are even offering free stocks when you sign up and make your first deposit. If you like this video and you want more like it, make sure that you subscribe to the channel. I post every Thursday and Sunday unless I throw in a bonus. You can also now follow us on Twitter, links down below. Keep an eye on the patterns, and thanks so much for being here, and I'll see you in the next one.